Good afternoon, everybody, and welcome back to FAST CPAs and Consultants. As every week, here we are with our CPA, Fulton Abraham Sanchez. Hello, Fulton, welcome.
Hi, Monica, thank you.
You're welcome. For the ones who are new in our channel, this is a video series called Tax Talk, where we are going to talk about the different tax strategies that you must follow according to your situation. And we will answer all the received questions through our social networks, which you will find as well in the description of this video. Today, we are going to talk about real estate opportunity zones. This is our fifth video about real estate. So if you want to know more, check on our Tax Talk playlist. So Fulton, let me begin with the first question. Okay. Here we go. What is an opportunity zone in real estate?
Opportunity zones are the special zones created after the tax reform of 2018 to create an incentive for investment in, let's say, investment in zones within the USA that are under the poverty line. The objective of this initiative created by the government is to attract specific investments from, it could be from real estate investors, it could be for any other type of investors who want to save in capital gain tax. The attractive of this zone is that if you have a property, if you own a property and you sell it, and you have, this is a property for rental property, a property that you have for business, commercial property, rental property, whatever the kind of property it is, but this is not your home. This is not your, you sell your house and you reside. This is a property that you own for commercial, for business, rental or residential that you rent it out. And you sell the property and you make $100,000 for capital gains. So that's your gain. So you have to pay taxes up to 20%. If you invest in an opportunity zone and you keep the investment for 10 years, you have zero tax after 10 years. This is the attractive of an opportunity zone, is the forgiveness of the capital gain tax that any real estate investor have to pay to the IRS for their gains when their property is sold. You sell the property that you have to pay your taxes. But if you invest in an opportunity zone, either in buying a business or first localizing the opportunity zone and then reviewing what is the structure of the base of the zone, what kind of properties, what kind of business the opportunity zone has, and you invest your money there, and you notify the areas that you are investing, and you keep for 10 years investment, your capital gain will be zero after 10 years if you decide to sell the property. Your participation in real estate in the opportunity zone, if you decide to sell it, it will be zero. That is the attractive of an opportunity zone.
Got it. Thank you. And what is a qualified opportunity zone property?
A qualified opportunity zone is a zone designed by the IRS. The IRS is the only one designing and authorizing the creation of opportunity zones, and there is a link, there is a website in the IRS. You just type and you Google IRS opportunity zone, and the link from the IRS will appear, and it will give you where the opportunity zones are located. They are located by county and by zip code. You, depending on where you want to invest, the objective of the logical thing will be to invest where the market that you know. So if you are in Texas, you invest in Texas, in the location that you know. It will be a little difficult if you, unless you know all these other markets, and or you have a partner that who knows the market, and for you to invest in a market far from where you reside, market where you live.
That's clear. And what does it mean to be in an opportunity zone?
It means that you are considered a investment vehicle for attracting capital to the particular opportunity zone. It means that you are qualified to accept investments, accept money from other investors who wants to cash in, or in this case, benefit from the zero tax that they will have after 10 years. It is not only for real estate investors, it's for any kind of investors. It's not only for real estate. If you have stocks in the stock market and you want to bring it to the US, to the opportunity zone, you can do it. If you are a foreign investor and you want to invest in an opportunity zone, then you can also bring your money and put it there. But the nature of this is the deferral of the taxes for a real estate investor or for investors who are planning to sell their existing investments and instead of paying capital gains, because they hold it for many years, instead of paying capital gains, they will bring that money to the opportunity zone.
Understood. And how does an opportunity zone work?
An opportunity zone works first by qualification with the IRS. They have to notify the IRS that they are forming a fund, because this is a fund. They are forming a fund with the requirement that the IRS has demanded be located be located within the opportunity zones designed by the IRS. Then they form could be a company, an LLC, and once the LLC is formed, they apply for a classification of an opportunity zone fund with the IRS, and at that point they start accepting investments.
I see. And can anyone invest in opportunity zones?
Yes, anyone can invest in an opportunity zone. Either real estate investor bringing gain from capital from their investments, selling our investments, or anyone interested in investing in the opportunity zone. Remember that after 10 years, you either bring your money from a previous investment, or you bring your money new without an investment before. After 10 years, if you hold the investment in the opportunity zone, you will have no capital gain tax.
Okay, got it. And how do you buy property in opportunity zone?
The objective of the opportunity zone is not directly buying property, because buying property doesn't contribute to the creation of the improvement of the opportunity zone that is experiencing poverty. So you can buy property in the opportunity zone, but the objective is not the purchasing of the property only. The objective is to invest in the business that are operating, that are working in the opportunity zone. So it's not that I go to an opportunity zone and then you buy the property and then you buy. No, buying the property is for the formation of the opportunity zone. If you want to form an opportunity zone within the counties, within the zip codes that the IRS has designed, you can buy the opportunity zone. You can buy the property in the opportunity zone, but that doesn't mean that you are qualified for the opportunity zone tax forgiveness after 10 years. Within that property, you need to create an investment. You need to create a business that creates employment. Because if there is no business and there is no employment, the property, the investment itself doesn't qualify for an opportunity zone. You have to create a business, you have to create employment, and you have to improve the opportunity, the zone that is under the poverty line. So that is the objective of the opportunity zone. It's not only the purchase of the property. You can buy strip malls, you can buy property, but that doesn't mean that you are going to be awarded the forgiveness of the capital gains after 10 years. You have to create businesses, and you have to create work, employment, and you have to improve the zone. With that said, with all that created, then you attract investment to the opportunity zone and you manage the opportunity zone because you will be an opportunity zone fund. So you can buy property to create the opportunity fund, the opportunity zone fund, but it will not mean that you are benefiting or you will be benefiting from the forgiveness of the capital gain of the capital gain, because there is no business that has created employment and improving the situation for those for these impoverished zones in the USA.
Okay, that's clear. And related to that previous question, so can I buy a house in an opportunity zone?
Yes, you can, but it will be like buying a house in any other zone. It doesn't have any meaning.
Okay,
it's just
any
buying
benefit?
a property. Yes, it doesn't mean anything.
Okay, and how do you find out if a property is in an opportunity zone?
By Googling the list in the IRS.
Okay.
You check if the property that you are targeting, it is in what is the zip code of the property, and then you go to the IRS list. You Google IRS opportunity zone list, and then they will give you the list of all the codes, all the zip codes, and then you find if your zip code is there, and then yes, then if that is the case, then you can buy. But remember, buying a property in opportunity zone, it doesn't mean that you will enjoy the forgiveness of the capital gain. This is just a property,
Exactly.
a property in opportunity zone. That doesn't mean too much.
Exactly, I see. This is our last question, which is related to all the information you have already given us. How do I become a qualified business opportunity zone?
Okay, from the point of view of the IRS, you need to inform, you need to report to the IRS when you file your tax return. Obviously, you need to have a company, either an S corporation, a corporation, or an LLC that you form. LLC will be better. You form the LLC, and you have to file a tax return for the LLC at the end of the year. When you file the tax return, you file the form informing the IRS that you are claiming the classification for an opportunity zone fund, for a qualified opportunity zone fund. You are a fund, opportunity zone, qualified opportunity zone fund, because the money is gonna come to your fund, and that will be the tax side, the structure side that you have to inform to the IRS. You file your tax return for the company that you have opened to form the fund, the qualified opportunity zone fund, and with that form that you file with the IRS, you are fine. You are classified as a qualified opportunity zone fund. But that is the tax side, the structure side. With that said, before even filing your tax return, you have to create the structure to receive the investments from other partners, from other investors. So at that point, you need to create, or even before that, you need to create an operating agreement. You need to create the operating agreement, and within the operating agreement, design how the fund will operate for every investor. What are the requirements? What is the minimum amount that you will accept, and what is the kind of business that you will be investing, or you will be forming for the creation of employment? Because remember, you need to create employment. If you are an opportunity zone fund, it's fine, you can buy property, but that property needs to have businesses, needs to have employees, need to improve the condition of poverty for that particular zone that the IRS has designed as a qualified opportunity zone. That's how you qualify as an opportunity zone. So there is a qualification at the tax level with the IRS, and there is a qualification even before that at the operating level, when you have to create the structure of all these investments and businesses and employment for the creation of the employment and the improvement of the zone where you are investing in.
Okay. That's really clear. Thank you. And well, Those were the main questions about this subject, but don't worry, we will still do more videos about real estate. So double check if you have already subscribed to our channel so you can be notified when we publish new videos. Thank you for joining us. And of course, thanks to our CPA Fulton for sharing his knowledge, as always, and really clear. And well, see you everybody in the next video. Bye-bye.
Bye-bye. Thank you.